Hello and welcome to Discovering Supply and Demand. This is objectively how the market works on a very micronized scale. And you can choose to digest this information and decipher whether or not it's garbage. And if you think it's garbage, do yourself the favor and click off the video. But yeah, let's just get right into it. So when I trade, I'm looking for imbalances in aggressive buyers or aggressive sellers, because in order to move a market, you need an imbalance of buyers or sellers. Otherwise, the market as a whole would not move without an imbalance of buyers and sellers. So how do we do this? We have to, one, look at the tape or order flow. However you get there, it can be reading the tape, it can be reading order flow bars, and that's kind of what I do, but I also look at the depth of market. And I just get a feel for who is under the most pressure, who is feeling more of the emotions, or in other words, is there more supply or is there more demand in the market? And then that can eliminate a lot of randomness from the market, because if we see an actual buyer that is willing to lift the offer and trade aggressively, then there's a good chance that the next time that price comes down to where they got in and said, you know what, I think this is a good price to get long, there's a high probability that those same people that got long are going to either add to their positions or defend their positions. So what we're going to do is I'm going to just go through bar by bar and show you what this looks like. And I'm just going to close my eyes and just scroll back as far away as I can and see, what price action looks like. And I'm going to go to the market open. So if it's on the ETH session, I'm going to go to the market open. All right, so market opens right here. So I'm just going to zoom in. As we can see here, there is 93 contracts traded at the bid, and that is 93 sellers saying that we are willing to sell into the bid and take a shittier price because we're so convicted that the market is going to go down. So in order for anyone to make money in the market, as a buyer, you need to buy low and then sell high, right? And then as a seller, you need to sell high and buy low. And when you get an event like this, an order flow event like this, where you have 93 trading at bid and only 6 trading up into offer, what does that realistically tell you? Well, that tells you that there is significant weakness in aggressive buyers comparatively to aggressive sellers. 93 people willing to pay the best bid, which they're effectively doing the complete opposite of what they're supposed to be doing to make money. Because when you hit the bid like that, you're saying that I'm not going to sell high and buy low. I'm actually going to sell low and try to buy back lower. You're being aggressive. So we see that here, and what happens, I mean, this is pre-market, but what happens when we get that test back into these aggressive sellers? They ultimately defend their positions. Only 10 traders from the long side were even filled above this initial imbalance in the market. By the way, these are called stacked imbalances, is how I use them. But, so yeah, towards the market open here, and this is what, the 19th. So at this point, if I were trading this, and I didn't take this trade because it was like pre-market or whatever, I'm going to wait and see what happens when we come back into this supply, because we know that there's supply here. There's a seller waiting to be filled here. He was already filled. Chances are that the next time the market comes into him, he's going to add to his position, defend his position, or buyers are going to squeeze him out and create a support resistance flip. So in other words, demand is going to outsize supply, and this seller is going to get squeezed out of his position and create a move in the opposite direction. So let's see what happens the next time. All right, so we have a test here, and we have already tested this seller once, and he did defend it. But it's important to note that the more that we test these sellers, that the less likely that they're going to defend the position. But it looks like in this case, off of, oh wait, this is at 9 o'clock at night. They are defending it until they don't. This is, I didn't realize, but this is the overnight session, in which we don't want that. So I'm just going to look off to the side. I'm only looking at the time. Going to go to 8:30 in the morning when the market opens. That's my apologies. The rules still apply. It's just there's a lot more volume being transacted on the in the market, I should say. A lot more volume, so there's going to be a lot more of these events occurring and a lot more trading opportunities. So we want to look at this. But yeah, so we can start here. We'll just start here. So obviously coming into these 682 areas, there is a lot of participation from the sell side. We've got 230 hitting bid, only 8 willing to lift offer, 107 hitting bid, and only 11 willing to lift offer. So objectively, we know that there is a lot of supply in this area. There is a lot of people that are saying that this asset is overpriced. We should continue to sell lower effectively. And we see that again. We see this participation over and over again in this area, but it looks like they're kind of getting somewhere. But we'll get into that. So we do have this run up into this supply here. They do defend it, and they're even willing to sell lower at these 680s. But clearly, bids were strong. They were able to push back into this initial supply, and we had 1 test, 2 tests. And remember what I said about the overnight example. The more that you test these zones, the more fear, uncertainty, and doubt that these sellers gain. When they defend these positions effectively, and also when they even are willing to offer lower, this should be able to shake out the week longs. This is a lot of volume. This is good volume. We should be seeing lower prices. But the fact that we're not shows strength from the bids. So the next time that we come up into this zone, it's kind of instilling that fear, uncertainty, and doubt in these sellers, and it may shake them out of their positions. So now we're seeing over here, if we look off at this 82, we've got this 97 lot traded comparative to 1 hitting bid, 1 hitting bid, much more demand objectively, meaning that it is factual that we are seeing much more demand than we are supply here. So that should be, that should be a red flag for these shorts. So let's see next time. All right, so they are able to hold this market down, at least in the near term. I wouldn't want to trade this just yet. If it were me, I would be looking for us to have a nice candle close above here and start seeing some more demand above this supply. Because they can, at this point, see sellers are still defending. They're still defending. If it were me, I mean, this is pre-market, not as much volume, but if it were me, we did have a nice rejection here. This is kind of up in the air. It would be aggressive, but we could short 81.50 here. And we are holding the 81.50, and yep, so we have a dump down to this 78. And so we want to see what happens the next time that we come up into this zone here. Because that is ultimately where there is supply and where sellers are very active. Alright, so I did skip a bar here, but we had a nice push up into this supply. We are kind of seeing some indecision here. So we are still defending the 81, but we did test it once, twice, 3 times. So the probability that this is going to hold the next time we see it becomes more and more unlikely, depending on context. You know, are we just going straight down? Then, you know, maybe I would take that trade. All right, so we're starting to see some demand up here in the 81s. So we've got 86 lots trading offer and only 8 trading bid. What this is kind of telling me is that we're willing to contest these sellers because we're convicted in the move that we're going to go up. Now we're willing to pay higher prices because we have so much conviction that the market is more likely to go up. That is what the 86 imbalance is kind of telling me. Now they're still not able to push out these shorts just yet, and it is pre-market, so lots of interest in this candle. There's really nothing to go off of here. Alright, so this demand was able to squeeze out these shorts. See, now this is a more enticing candle to me. We've had a close above this supply, this red box that I drew, and I'm going to get rid of it now. But we kind of know that sellers were very active here. And now, you know, if you're a seller right here, and I know you guys have all been there, and if you're a seller right here and you see this candle and you see this sort of demand coming into the market, this 88, this 163, what you're saying to yourself is, what happened? There were sellers here. Why aren't they holding their positions? Why aren't we defending our positions? But if you see this, if you see demand completely contradicting your trade here, it becomes getting out of that trade. It becomes a lot easier to do, because me or someone that isn't trading using the tape or order flow, they're not going to see that demand is heavily outweighing supply, at least in the near term. So me, I'd be looking to long 81.50 at this point. See, now we're having persisted buying, 83. I wouldn't have gotten filled on my long, but if you want to be aggressive, you can get filled with this 87 bid at the 83. So, all right, so in this trade, and we're a couple minutes out from market open here, we would have gotten filled at this 83, and we would be targeting the next zone of supply, which is around this 89. I would take it off at 89. I always front run the supply zone, because you really never know. But I would be taking this trade off at 89. And we do get that fill, and you know, that next area of supplies is up here at the 690s. And we can go back and look at what created this supply, which was a long time ago. Okay, here we are. This is what created that area of supply that we were just looking at. So 13 willing to lift offer and 131 willing to sell at bid. So very aggressive downward movement. Okay, and we're back where we were. So that took a lot longer than I anticipated. It was like 2 days ago that that imbalance was formed. But yeah, so sellers are active at these 690s, and that's what is important, and that's why we take the trade off as soon as we get up to this area of supply, because we don't want to step in front of these sellers, because they're likely going to re-engage the bid at that time, hit the bid. Okay, so next candle, that's exactly what we see. We see sellers defend their positions at 690, and we come down back to demand. Me personally, if we go back and we draw where the sellers lost, because where the sellers lost is equally as important as where is the current demand. So we know that we had sellers here in this area previously, and this is also the moment where they lost. So I'm anticipating, unless sellers really are aggressive at hitting the bid and we start to see closes below the 81, we're seeing some aggressive sellers like this 245 start hitting the bid down below these 81s. I'm anticipating a potential long in the 82 area. This 163 would be a nice entry. And what's nice about this trade as well is if we do have a wick that comes down back into this previous supply zone, we do have this 80 here that is also holding us up. So what we could do is have a stop here at the 79, and then along here at the 82 or the 81.50 or the 75. So let's see what happens. Alright, so we don't really even get a clean bounce off of the 81.50. We don't even see it. Buyers are so aggressive that they just said we're actually going to buy it up here because we're so convicted in the move above 690, at least at this point. So if we did take this long, this would be a bit aggressive for me. But this 83, you definitely can take this long, and then take it off once again up at the 89s, and that would be a winner. Or if you want to play a bit more conservatively, for me, I would probably take some off at this 245 because this is an area where supply was a bit heavier than demand, quite a bit heavier than demand. So I would probably take half my position off here at the 85, and then the rest off at the 89. Alright, so we're getting a bit of traction from these buyers. Nothing really crazy yet. We didn't really see any green prints. So they're still there. The sellers are still there. So I'm still looking at this 82 area for the longs. Alright, so say we get filled here at the 81.50. I'm going to put a stop. I typically run a 3-point stop. So you're looking at, what is it, 78.50 for this 81.50 long. And see, alright, so they're still selling into this demand here. And alright, so they do, buyers do come back and defend this area where the sellers had initially lost, because as we all know, this is essentially resistance flipped into support, and flipped into support, SR flip. We all know about it. So yeah, once again, we did take out these 90s here. If you're a bit of an aggressive trader, you could potentially try and hold for these 99s, 98s, because we've tested it once, twice, failed it twice. There's a higher probability that we do try to search for this sell side liquidity up here at the 99. So let's see. Alright, so we are getting another test here up at our demand. Let's see. Alright, so we are able to sell through it this time, which is fine, but we now know who's in control. I'll give you 3 seconds to tell me who's in control now at this point. I'll tell you, it's the sellers. Sellers are now objectively in control of the market. We're putting in good volume down here. The same area where sellers were initially in control back here, where they lost control, was the same area that buyers took control of. Now it's going to be the same area that sellers are going to defend once again. So if we look, we've got a potential trade here. I'm not really seeing a lot of active, aggressive participation from the short side up at these 82s as much as I'd like to be. I'm more so seeing aggressive buying. So I personally wouldn't take this trade because there is a potential that we just come down to the 78 and then we could just consolidate and eventually squeeze out these open shorts that pushed us down. So I wouldn't take this, but let's see what happens. Alright, so yep, we've got a lot of demand entering the market. Very convicted move. I guess in this situation, they market makers, they could have potentially shook out the weak longs just for them to move price back up. But what's interesting about this candle here is it is very, very evident that we have a lot of demand entering the market. And specifically in these 83.50s to 85.50s area, we had one aggressive seller hitting bid 0, 0, 0 relative to 125, 115, 74 even, 86, and 131. So this is going to be a great continuation long setup. It's where our demand is, our demand zone here. It's creating its own area of demand just by these open longs being there, because the theory is when price or sellers are willing to start selling again, what's going to happen is this 131, this 86, this 74, 115, 125, they're just going to sell these guys that are open on their long positions. They're just going to sell into these guys, and they're just going to make their position larger and larger. They're just going to say, I just want to buy all of the contracts you're willing to sell to me right here, because I'm so convicted that we're going to take out these highs. So let's see. Puts out our zone there. But yeah, sellers aren't even able to push us back to these 85s. But we'll see what happens the next time that we come into here. So we're kind of taking out this 90 here, and you know, if for whatever reason you did get long in this area, I wouldn't advise it. There was really no signal, but you would be looking for 99, 98.50 to take this trade off. Okay, we are seeing some engagement from sellers here at the 98, but it just doesn't matter. We are so convicted in the long side that the seller here willing to sell 505 contracts, it just doesn't mean anything. And for me personally, when the market is just going straight up like this and there's a clear winner, whether it be short side or long side, I don't ever want to step in front of it. I would never sell this 700, this 702. I would never sell it, because there is just so much initiative from the buyers saying that this is underpriced, we'll keep paying these prices. So I almost like this for a potential long, because how strong this move is, because now what we have is we have 505 aggressive shorts in the market that are effectively immediately being stopped out, or if they're not already stopped out, they're underwater. So we can look at this whole area, because we have, not only do we have trapped sellers, we also have open longs here. This 228, this 117. We've got open longs, lots of demand, and we also have trapped supply. So that's going to create a nice area where you're going to have people adding to their positions. This 228, this 117, they're going to be defending their longs. And then you're also going to be having these 505 traders that are underwater. They're going to be getting out of their positions. And when you're a seller in the market, how do you get out of a short position? You have to buy it. So if there's people here that are underwater, if price comes down and gets close to their break even, we've all been here before, we're trying to get that break even. We're like, get me the hell out, I don't want to lose any money or any more money. So when price comes down here, these 505 traders are going to be scrambling to get out of their positions. And when they're getting out of their positions, they're generating more long side volume. So that is why I would love to take a trade here at these 99s and have, you know, potentially 2.5 to 3 point stop. Okay, so it looks like it's just straight up still. So we could get an entry here if we're feeling aggressive at the 99s, 99.5. 99.25, and because we still do have these trap traders down here at the 98. Okay, so we are getting a bounce, and at this point there's not a lot of upside targets to work with, because we're not seeing many supply zones. At this point I would look for other sort of confirmations or targets based on my system. There's a lot more that goes into it, but we'll see how we can continue going. All right, so we've got 556 willing to lift offer here at the 704, which is good. This is great for our long position. We're holding that 704 on this next 1 minute candle, still holding that 704, still holding that 704 until we're met with some supply here at the 708s. So if I was long at this 99, and I see this 708 seller, I'm looking to immediately take my position off in these 707 quarter, 707 half. Just because, you know, there are sellers here, and there could be other sellers that see this and start to potentially add to this size. So yeah, I would be filled. I would be out of the trade right here. You know, that's 8 points. We'll take that. And then, you know, we just reevaluate the situation. We know, objectively speaking, that buyers are 100% in control. I wouldn't really be interested in taking any shorts until I start to see supply willing to take out some of these open longs and start to trap some longs. Then I would potentially start to look for shorts. But for the time being, it is really just, the story is just long this thing. More demand here at the 707.50. This is nice because we've got trap traders here and we've got demand here. So this could be a nice zone, and I'll draw a box. This could be a nice zone to get a re-entry long if you are still being aggressive. This is an uptrend. Okay. All right. So it didn't really give us an entry there. Let's see what happens when we come into it. All right. So we did get a close at the bottom of this candle up down here at the 708s, which I don't really like taking aggressive low closing candles like this. But if you're the aggressive trading type, you could. There's a chance that, you know, that buyers could just step right in and just obliterate these sellers, but you never know. So they're still pressing. We did get some buying here up to the 11s, but we ran out of steam. Only one buyer up here at the 11 that is willing to pay a premium because of their conviction in the market, and sellers overpowered them. So I'm growing less and less attached to this trade idea that this will work out if I was in this. Yeah, now, all right, so this is interesting. So there's 171 short positions that just opened relative to only 14 longs, just 2 ticks higher. So this is telling me, instead of get a little drawing here. So we had some supply here, you know, obviously because we ran into some resistance. We still had some supply here. This is where offers were confident and they were willing to hit the bid and defend this area. Now sellers are offering lower. They're offering even lower. They're growing conviction in their trade thesis that the price is going to sweep out this demand, etc., and we're going to have a move that looks like this. So what you could do is, if you're a breakout trader, you could see this. I would wait for the next candle. But if you're a breakout trader on this next candle and you're a bear for whatever reason, you could potentially join these open shorts here at the 710 and have like a 2-point stop, whatever it is, and play for the breakout below this demand. It's a bit more risky, but if that's your play style, then you can do that. All right, so here at the 710, we see we had our entry. If we were short side, we could have shorted 710, but we're running into an issue where the buyers are still defending this area. So if you're still in this short, what I'm saying to myself is, on this next candle, I need to see some supply enter the market again. I need to see another one of these 171 lot imbalances on this next candle, which we're not seeing. So if it were me and I took this short here at the 710, I'd be taking it off at 707 because I kind of want to, you know, mitigate my risk, because we're still holding demand here. Still holding demand. And then boom, you have buyers step back in and they could squeeze out these shorts, but what's interesting is we do have more open shorts up here at the highs, but I wouldn't want to really touch this with a 10-foot pole, to be honest with you, because it's, we're just obviously trending straight up, and we've got demand here. Obviously buyers are very much in control. I wouldn't want to touch it. Okay, so we're working on trapping these shorts right now as we speak. We're working on trapping these shorts, and even more so, we're saying bids are so aggressive that they're willing to pay that premium, lift the offer aggressively, created this imbalance where these shorts are open. So this could create a potential short squeeze and squeeze out all of these shorts, because they're going to eventually have to cover, because both of them at this point where this candle close are underwater. They're both underwater. Let's see what happens on this next candle. They retake it. Okay, retake it, see what happens. Like I said, I really wouldn't want to be trading at this moment. This is very convoluted for me. I like it when it's more clear, more obvious. We're just kind of chopping, still holding that demand. You could take this long, this aggressive long here at the 706 half. But yeah, I think that's going to be where we just about wrap it up. You guys kind of get the gist. Obviously this didn't work out. Demand kind of gave up. We can just kind of see what happened. They chopped between this demand, this supply. This demand flipped into supply, and then sellers were able to overpower this demand, and then we draw our little box, and then they sweep it lower, and then they keep offering lower. There's a good short opportunity, and now at this point we are just objectively bearish here, until we start to retake that initial area where the bulls had lost, and it's really just so on and so forth. But yeah, that's about it.